The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Finally time for big tech to put its earnings cards on the table. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Boston.
And I'm Alex Steele. I'm pumped for
Yeah,
Alphabet. I really feel it today.
And don't forget Tesla, too. Are you pumped?
Alphabet.
Okay.
I'm
what about
pumped
Texas
for it.
Instruments?
Okay, Texas Instruments actually could be quite interesting. All right, let's take a look at the market here. S&P going nowhere fast. But we do get almost $6 trillion in market cap reporting over the full day today. Remember, you do get Google, you do get Tesla after the closing bell, really focusing on those, and Visa as well. The Russell 2000 continues to outperform. In the last, few days, it's been up about, 10%, 8%. I mean, a really solid move for the Russell. 2-year yield getting a nice bid after the bond auction came in fairly strong. We get 5s and 7s later on in the week. But NYMEX crude down another 1.5%. Romaine, and this is something I feel like we're going to hear throughout earnings season. This is a China weakness. Copper also weaker. Iron ore also weaker. Aluminum, nickel, that China weakness coming through. We'll talk about that when it relates to some of those earnings later on, Romaine.
Yeah, we've definitely seen some bifurcation between the tech economy and, I guess, quote unquote, the real economy. Let's start off with the tech economy and those 7 magnificent stocks. 7 stocks responsible for 60% of the gains in the S&P this year. But with valuations so high, the fundamental case for further gains, that's in question. Alphabet and Tesla hopefully can provide an answer when they report earnings after the bell. Alphabet expected to post a slowdown in profit growth, while Tesla, as always, remains a wild card, the only stock among the Mag 7 that's failed to deliver a return for investors this year. Meanwhile, we're also going to get a look at the non-tech economy. We got earnings this morning out of Kimberly-Clark, a miss on sales growth. Out of Freeport-McMoRan, a guide toward higher unit cash costs. And from UPS, which is shipping more packages, albeit smaller and less profitable ones. We're going to get some more insight into the so-called real economy post-market as well, with reports out of Mattel, Visa, Chubb, and Enphase. And of course, politics still in focus as presidential candidate Kamala Harris secures the endorsement of almost every major Democrat. Harris also posting record-breaking fundraising of more than $100 million and kicking off her belated campaign with a rally in Milwaukee.
I am so very honored, and I pledge to you I will spend the coming weeks continuing to unite our party so that we are ready to win in November.
And that was Kamala Harris overlaid with some commentary by Alex. And Alex, you're just itching to get back to earnings. And I think that's where we want to start the show, because that's where investors' heads are at right now.
I am, but also, it's kind of interesting and really inspirational, just what's happening right now in the political market. Okay, so this is a great chart that just shows what's happened from 1993 to 2023. And basically all it shows is you have stocks going a whole lot of nowhere from July through September. And this is something that Scott Rubner over at Goldman Sachs has been talking about quite a bit. So usually around this time, you get a stall. Now, the S&P is obviously not in the stall period. Yeah, we had a decline over the last week or so, but we're definitely not stalling out. So the question becomes, do we wind up having earnings that are good enough from, say, the small caps, good enough from big tech, and good enough from the other 493 companies in the S&P to prevent this sideways trading action as we continue in this election year, Romaine?
Absolutely. Let's kick things off right now with George Maris, Chief Investment Officer and Global Head of Equities over at Principal Asset Management. And right now, George, I think everybody is looking ahead to these big tech earnings to find out whether that fundamental case that sort of lifted these stocks off of those lows from last October is still there. Are you seeing it?
Yeah, we need to, I think the Alphabet numbers are going to be critical here. We need to see whether or not that Mag 7, the big tech, continue to drive the market. They've clearly been the driver for the last year and a half. And if we're going to continue to see the index power ahead, they need to continue to produce. And clearly a lot of enthusiasm behind those names. They need to deliver.
We talk about this rotation, though, that we've seen in something like 7, 8 of the past 10 sessions, where the Russell not only really outperformed, but did so in a much more meaningful and consistent way that seemed to get people talking, that big rotation out of tech into more small, mid-cap names, that was something that was sticky. Do you see that momentum, the momentum for that to continue is there?
Look, always hard to predict the future, but I do think that there's going to be lasting power to this rotation. Part of it's where we've come from, Romaine. We've had a historic level of large cap versus small cap outperformance. Really, over the last 30 years, we've only had large cap outperform small to this extent twice before. Once was during COVID. The other time was during the TMT bubble of 99, 2000. I mean, those are historic levels, and we're there currently. So this rotation, I think, has staying power just because everybody's offside. Plus, as we see earnings likely broaden out and recover, you're going to see greater enthusiasm behind those smaller cap names.
So what kind of earnings growth do you expect for small caps versus, say, the broader S&P?
I think if we're looking at bottom-up estimates right now, Alex, you're looking at double-digit, low double-digit, 11 to 14% in small cap land. I think that's about right. And we're seeing a convergence between those smaller cap earnings and that Mag 7 earnings. Those Mag 7 earnings numbers, clearly the last year and a half, driven by tremendous growth in the Mag 7 earnings as well as multiple. Well, now we're seeing a convergence that should get people starting to think more carefully about small caps and I think more enthusiastically.
I mean, so is that an aggressive, then you want to sell the Mag 7 to buy small caps? Or is that like, no, just hang on to the Mag 7 and they're still going to be growing earnings at like 18%, and you also want to add to that small cap pile?
I think it makes small caps relatively more attractive. The market as a whole isn't particularly cheap if we look at aggregate multiples, but the market outside of the Mag 7 looks relatively normal long term, and in fact, in small cap, looks pretty doggone interesting. And so if you've got earnings growth fueling this, and buffeted by rate cuts, it really will help small business. I think there's a very optimistic case for going long small caps right here.
How much of that is aided so far and will continue to be aided by this shift that we've seen in rates to the downside?
Well, I think clearly the rates are a catalyst for what's happened. We've seen it, Romaine, after that July 11th weak CPI print. We've seen the strength in small caps, the biggest rotation we've seen again in decades. I think that persists. We're clearly seeing on a day like today it persists. I think that's just a reversal from what we've seen before. It's a catalyst towards moving your money where we think there's going to be earnings recovery. And remember, small caps tend to have more leverage, so they benefit from lower rates, but they also are more economically sensitive. And so that economic sensitivity benefits from cutting rates, getting the economy going, and trying to engineer this soft landing.
Do you have confidence, though, that we'll get that soft landing, that we'll stick that? Because for all this talk about this rotation into small caps, we've gotten a lot of economic data points, George, that does suggest there is significant softening out there.
Yeah, I agree with you there. I think we've seen both the lower income consumer starting to suffer. We're seeing comments from dollar store management teams that indicate a consumer under stress. We're seeing credit card delinquencies, especially at that low end, really starting to spike. So there's pressure there. There's pressure on small business. We're seeing small business optimism numbers declining. So there is definitely pressure here. Whether the Fed and the government can stick the landing on a soft landing, I don't know. But I do know that the fact that we're going through a mid-cycle adjustment, cutting rates will be supportive, and the market is likely to take this as a sign that the government doesn't want us to have a hard recession, and I think that's beneficial.
In terms of earnings, then, I guess the question is what's already priced. So I'm just looking at UPS. We're going to talk about that in just a moment, but the magnitude of the decline based on an earnings disappointment makes me wonder if we haven't re-rated enough into earnings that the miss on the downside will be so extreme versus the beat on the upside. How are you looking at that?
Look, I think it's tough. And right now, near-term moves are challenging. One, because we've got so much volatility on a daily basis. And you all see this, that there can be overreactions on the good and bad side in response to earnings. So I think that the bigger picture here is what do earnings trajectories look like as we move into the second half of this year? I will say, Alex, one of the things that concerns me right now is we're seeing a resurgence in mentions of cost pressures. We haven't seen that for a while. That's subdued. That's coming back. That is counter to the data we saw earlier in the month. So it definitely bears watching. If, though, costs can be managed, margins can continue to increase, we're going to have a good market for the rest of this year.
George, always great to talk to you. George Maris, Chief Investment Officer and Global Head of Equities at Principal Asset Management, helping us kick us off to the close here on this afternoon, and a closer look at one of the biggest decliners of the day, UPS having its worst day since going public back in 1999. We break down what from the company's earnings release is fueling that fall.
All right, plus highlights from our exclusive interview with Mark Zuckerberg, more on the debut of Meta's largest open source AI model ever, Llama 3.1.
And apparently, Alex Steele, people aren't popping the champagne the way they used to. Some interesting commentary by the CFO over at LVMH saying that demand for champagne is in the doldrums. A conversation coming up in just a bit, and so much more. This is The Close on Bloomberg. Welcome back. It's time now for our stock of the hour, and taking a look at UPS, biggest decliner in the S&P 500, a 13% plunge, worst day for the stock since it went public back in '99. And the CEO basically saying they're off to a slow start in those turnaround plans. Abigail Doolittle joining us for more on what's ailing UPS. And one thing that jumped out at me was this discussion that they had on the conference call about how volumes were actually still elevated, but customers were opting for the cheaper delivery options, basically the slower delivery options, and that seems to be the concern, at least for UPS.
It is really interesting that you're bringing up that point because that's gotten buried beneath the surface beats. So misses. Let's start off with those surface misses. So, coming into this quarter, I think investors and analysts were really expecting a disaster, but it turned out to be worse. What analysts were expecting were rising costs from the union agreement, the new union agreement put into place last August 1st. And then on top of it, it wasn't from the demand, to your point, but because of customers opting for the cheaper version, the ground versus the air. It was a lower shift mix from a yield standpoint, and it just really hit both sales and earnings. So sales were hit by the lower yielding shift, whereas earnings, it was a 3% mix on the top line, so that's not small. That was really the biggest surprise. And then profits hit by about 10% on the bottom line. So really a bit of a mess for the company.
So my question then is this just going to be sort of a volume game, like as much volume as you can to make up for that lack in profitability?
That's a great question, because in some ways you could make the case that because volumes improve for the first time in about 10 quarters, that maybe this is the worst case scenario. If they can continue to increase volume, it probably will come down to the questions we're all asking about the economy, the state of the consumer, inflation coming out of the pandemic, as to whether or not you'll see some consumers start to go toward the more expensive product. We just don't know that. On the other hand, they're also seeing some helpful signs internationally. They're also talking about a $500 billion buyback in the back half of this year. Half a billion dollar buyback at the second half of this year, $1 billion buyback next year. They have a new contract with USPS. So there is a possibility that the worst is over, although technically I would say this stock probably has a little bit more to go. It's kind of amazing that none of this was priced in, even with such low expectations.
I'm curious by that, and you see a little bit of a drag on FedEx today, down a couple of percentage points. I do wonder about the read-through into the consumer overall, and it's going to be a couple weeks before we get the sort of pure play consumer stocks reporting earnings here. But whether we can extrapolate something from these earnings into maybe what we're going to hear out of some of those apparel and other retailers.
Maybe. It's a really interesting question, Romaine, because I think that what it signals is, to the point of volumes being, on the upswing, that consumers are there, they're willing to spend, but they're going for the cheaper product. So I think that you may see more of that going towards, say, the Walmart, the Costco, as opposed to the Target, the more expensive product if Target got its Target back, then maybe they would have less of an issue. But I think that you're going to see some of that cost saving, but I don't think that we're going to see a black hole in terms of consumer spending. And it also seems like there's certain niche products, like those Adidas sneakers that we both discovered on radio a few weeks ago, the ones with the stripes that everybody sees in New York that help.
The ones isn't that all of Adidas?
No,
there's this one really.
You're talking about the Sambas?
It's like this. Yes.
Okay. Do you have a pair of these Sambas?
I don't. I only have my Michael Jordan, so I'm a Nike person and a Hoka person.
Still get a kick
it's hard. I know we still have to get those on the show.
You have Sambas?
No, I have orthopedics. Remember we had this conversation? Abigail, thanks a lot. Abigail Doolittle joining us there. And then continuing on this conversation, another company we're watching is LVMH. So here was the kicker. The CFO saying today that champagne is facing, quote, severe demand issue. This is as the company reported that sales growth slowed last quarter as wealthy shoppers rein in spending on pricey Louis Vuitton handbags and Dior Couture. I know we're kind of joking about the champagne thing, but in general, the sales were really grim on the leather side. The organic sales were only up 1%.
Yeah, it was grim all around, and you see the pullback. And I think one thing that jumped out at me, too, was that in the past, it seemed to be much more of a China story. But now it looks like a lot of this pain is much broader than just China, and this is a bigger issue. And we should point out that when that headline went by on the Bloomberg terminal about champagne specifically, that read spiked immediately because, of course, that hits home.
Well, yeah.
I mean,
It hurts.
Yeah, I mean, let's just say we go through our fair share
I know.
of bubbly.
I think it's my fault.
So, although we're not buying, we're not in the Moet camp. We go for the cheaper, the finest, cheapest champagne out there.
Oh, okay.
Yeah.
That sounds good.
So.
I really cut back after I got long COVID, so it's pretty grim. But the ADRs really were getting hit here as well. But apparently Chinese consumers were going to Japan to buy stuff, but overall China was a little weaker. That I found to be a little confusing.
Yeah, interesting time for a conglomerate that, of course, really dependent on international spend. And, of course, interesting comments by the CFO on limited demand right now for champagne. When we come back here, we're going to talk about the first of the Magnificent Seven stocks to report earnings. It is in our top calls as we get a view from the sell side on how Alphabet could set the tone for big tech. This is The Close on Bloomberg. All right, let's get a view from the sell side with our top calls, the big movers on the back of analyst recommendations. And we start off today with Coinbase, an upgrade to buy over at Citi with a huge price target lift to a street high 345, up from about 260. The analyst saying Coinbase can capitalize on a more conducive regulatory environment in the crypto space, given the changes in the U.S. election dynamics, as well as that recent Supreme Court ruling about U.S. regulatory agency overreach. Those shares, though, down 2% on the day. Next up, a fresh buy rating for Krispy Kreme at HSBC. The analyst says their operating outlook really looking up thanks to that new partnership with McDonald's. The analyst also saying that Krispy Kreme's sale of a majority stake in Insomnia Cookies, that's going to help it chip away at a debt faster and free up some cash. They're sticking by that $14 price target. Investors bidding the stock up by about 3%. And finally, let's take a look at Snap, an upgrade to equal weight over at Morgan Stanley with the analyst encouraged by an improving advertising business, but he's not ready just yet to jump to an overweight rating, saying that the social media company's mixed engagement trends still giving him pause. Shares down about 1.5% on the day. And those are some of our top calls. We do want to stay in the sell side now and stick with technology. We're less than an hour away from Alphabet reporting its second quarter results. That could set the tone for how the rest of the mega cap tech companies perform and utilize ad spending, the cloud, and generative AI. Let's get some insights out of the managing director and global internet analyst over at Wolfe Research, Shweta Khajuria, joining us right now. Thanks for joining us here. Let's give some insights here into what's going to be the most critical thing, because last quarter, there was less of a focus on ads, less of a focus on revenue generation, and much more of a focus on that CapEx spend and the company's investments in AI. Is that still the focus?
It's first of all, thanks for having me. It's certainly one of the biggest focus areas. So in terms of top AI-focused topic, it's not just the CapEx, but also any commentary around the monetization of all the investments that they are making, i.e. the return on investment spend, whether it is towards cloud, whether it's on their ad platform, or just in terms of cost savings across the company. So that is a top investor topic. Most expect them to reiterate their spend levels for 2024, which they have said is probably going to be close to around $50 billion, sequentially increasing each quarter through the year. And then the other areas of focus will also include any commentary on OPEX, given the rise in D&A from CapEx spend. So where are they going to get increasingly efficient? And then the obvious other two things are capital allocation, more dividends, more buybacks, and just overall advertising sentiment, given that the consumer is starting to pull back on spend. So how's the sentiment on ad spend? You
used the word efficient, and I think the last big cycle that we went through with these big tech names, there was a lot of talk about, we'll just borrow a phrase from Meta, the whole year of efficiency. Do you think we're going to see more announcements on cost cutting out of Alphabet later tonight?
That is pure speculation, but if I were to guess, I'll take the under on that in terms of headcount reduction. I think that'll remain an option value. They also have a new CFO coming in who will not be on this earnings call, but she starts end of this month. And so I would be surprised if in her early tenure at Google, she would start making cost cuts or headcount reduction right away. So my best guess, I would say, is that perhaps they'll continue with operating efficiency gains with headcount reduction as an option value into 2025.
Shweta, we were just showing a chart of M&A targets that happened for Alphabet. Clearly, Wiz was like, thanks, guys, no thanks. We want to IPO. Alphabet also dropped HubSpot. What do they do now?
Well, I think that, first of all, the Wiz acquisition price clearly was a very rich multiple. If they really did make $350 million in revenue, and even if the expectation was meaningfully higher revenue for this year, that's a really rich multiple. So that was an expensive takeout. I think that our view remains that for AI-driven cloud growth and acceleration and share gains, Google will, and same thing for Amazon as well, they'll likely remain on a lookout for acquisitions, whether it's around security, whether it's around features that help startups onboard quicker, whatever the target area is, in order to compete better with Azure. Our view remains that they'll likely try and make more acquisitions, both in AWS as well as Google.
To drill down a little bit into some of the specifics for today also, can we talk about gross margins for a moment? Because as we wind up seeing a higher cost for all the AI chips, they're also able to pass some of that on to Gemini users that actually pay for that stuff. How do you expect us to see that today when the numbers come out?
We expect a little bit of a beat across both top line as well as bottom line. So we expect that because the advertising environment has remained positive, generally speaking, in terms of the demand trends from advertisers, we expect a beat on YouTube. The demand trends for shorts, YouTube Shorts continues to rise, as well as on search, and that should allow them to flow through to the bottom line and finally to the operating margins, which is also an area of focus for Alphabet.
All right, Shweta, thank you very much. Really appreciate it. Shweta Khajuria, thank you very much for joining us over at Wolfe Research. Thanks a lot. I'm really looking forward to it. I think that what the demand is for cloud, how that measures up to Amazon is going to be really interesting. The gross margin part's going to be really interesting. And just, YouTube is so massive.
Yeah.
And how they continue to monetize.
And remember there was all that talk a while ago about maybe they would spin off YouTube. And then, of course, they were like, haha, no, why would we ever do that? But it's getting kind of to that point where you're going to start to hear that drumbeat again here, because there's a lot of value there. I mean, we talked about this when we got Netflix results last time. I mean, it's the one quote-unquote streaming platform, if you will, that does better than, only one that does better than Netflix on a standalone basis. Yeah.
Yes, that's what Mandeep Singh said, that their run rate is just so big that they beat Netflix. That's pretty staggering.
Yeah.
All right, well, coming up, Democrats coming together to center around Vice President Harris to take on Donald Trump. Our conversation with Brian Gardner, Chief Washington Policy Strategist over at Stifel, will be joining us. This is The Close on Bloomberg.
And I am so very honored, and I pledge to you I will spend the coming weeks continuing to unite our party so that we are ready to win in November. So, friends, we have 105 days until Election Day, and in that time, we've got some work to do.
Just about 3:30 p.m. here in New York. This is the countdown to the close. Romaine Bostick here.
And I'm Alex Steele. So we just heard from Vice President Kamala Harris hitting that ground running after fresh endorsements from Senate Majority Leader Chuck Schumer and House Democratic Leader Hakeem Jeffries. Now, joining us from more perspective is Brian Gardner, Chief Washington Policy Strategist over at Stifel. Hey, Brian, did you listen to the speech and what did you think?
I did listen to the speech. In market jargon, I think it was a bit of a relief rally that you heard at the speech. There was a lot of energy in the room. It was a speech to energize the Democratic Party, and I think that it accomplished its goals. She's going to have to shift now going forward in subsequent speeches to reach out to swing voters, but it was, I think, a pretty good start for her campaign.
What now? So if she's talking to the base, she's galvanizing the base. The base hasn't been galvanized in a bit of time. So what's next?
That part will go on for the next couple of weeks through the campaign, through the convention, excuse me. And then she's going to have to pivot and start to talk to non-Democrats, swing voters, gettable Republicans, if there are any out there. And that's an uphill fight for her. I mean, that's going to be a tough challenge for her because she has high negative numbers. So she's going to have to convince swing voters, gettable Republicans that she's up for the job, and that she's not too far to the left, that she's not beholden to the left. And that's going to be very challenging for her.
I am curious, though, Brian, about the strategy that this ticket can take. Obviously, we still have to wait to find out who her VP is going to be. But there is a lot of discussion that this election isn't going to be decided on the traditional issues that maybe past elections have been decided, that this is much more about the personalities and the perception of charisma and things like that here. And I'm wondering how you think Kamala, whoever ticket, stacks up against someone like Donald Trump, who's obviously very charismatic, for better or for worse, and someone like J.D. Vance, who also has a tinge of momentum when it comes to his personality as well.
Vance being a lower key individual than the top of the ticket on both sides, he's more subdued. I'm not sure that it is as much a charisma, personality-driven election as you might have suggested. I still think it's a referendum on the state of the economy and what people expect for the future of the economy and the future of the country. So, and that kind of works into another challenge for Harris. She is going to be tied to Biden. They both have low job approval ratings. Consumer confidence has gained a little steam, but may have stalled out. People think that the country is on the wrong track, the right track, wrong track. Polling in the country is not good. So she has to convince people that the apprehension that they feel about the economy, about inflation, isn't real. And that's a very difficult task for her to pull off. People have kind of made up their mind of how they feel about the economy. She's tied to that. How does she get beyond that and tell people, yeah, it's going to be better under me than it was under Joe Biden?
Can you do that with such a short amount of time? I remember in the old days when I used to cover these races, they used to always talk about how a lot of voters' perception of this country and perception of the economy during an election year, that those perceptions are largely shaped during the summertime, that basically they go into the voting booth in November with a perception that was largely formed in July and August.
Very tough for her, but I think she has a better chance than Joe Biden, right? Because she brings a fresher perspective, more energy. Voters had decided on Biden. And let's keep in mind, in a Biden-Trump matchup, I think the election was close to over. I think people had made up their minds because you had two candidates who were very well known to voters. Donald Trump in his third straight election. Joe Biden would have been on the national ticket for the fourth time in the last six. Mm-hmm. That dynamic has changed a little bit with Harris coming in. And so she has a chance that Biden never would have had to convince people to go with her because she's a little different, a little fresher. Biden never would have had that chance. So she has opportunities that Joe Biden would not have had.
Hey, Brian, on the issues, where is Kamala Harris, more left or more moderate?
In terms of overall, I think she's on the left for the most part. Remember, she was a senator from California. Her primary upbringing in California is the politics more of the left than the center. One area that I think is kind of interesting is crypto, because I think there's a generational divide among Democrats. Older Democrats, like Elizabeth Warren, like a Joe Biden, they're crypto skeptic. Younger Democrats in Congress and throughout the country are more crypto friendly. And Harris, being a younger Democrat, also looking at how crypto campaign donations have moved towards Republicans, and Republicans seem to be co-opting Democrats on crypto. I think she may shift a little bit. That's one of the areas where she may show a little distance between her and the Biden administration.
Well, real quickly, though, Brian, we only have a few seconds left. I am curious whether that translates also into broader perceptions about her stance on big tech. This has also been somewhat of a campaign issue, the kind of the crackdown or the attempted crackdown that we saw in the Biden administration on big tech. Do you think a Kamala ticket changes those perceptions?
So she was pretty close with the industry when she was a senator from California. You would expect that. She's representing Silicon Valley. The Biden administration, of which she has now been a part, has taken a different tack. And I think she can't think in terms of California. She has to think nationally. Tech is not beloved around the country, especially big tech. And so I suspect AI, social media regulation, I expect it to be more of a continuation of the Biden administration and less Harris in the Senate when it comes to policy.
All right, Brian, we have to leave it there here. We're going to catch up with you again, certainly over the next 100 or so days as we count down to the U.S. election here in the United States of America, an election that has been completely upended, Alex Steele, of course, by Biden dropping out, unprecedented move for a major party to basically abandon their presumptive nominee for Kamala Harris. And maybe, as Brian said, she brings something to the table, which is that maybe people know less about her than they know about Biden. And maybe in this political climate, that might work to your advantage.
And energy.
Yeah.
She definitely brings a lot of energy. What is it, 105 days? Are we 105 days away?
It's 100 days roughly or so. I think. I don't, because I would rather kind of forget this all. But honestly, just hit me up with something. Let me go to sleep for 3 months. Wake me mid-November, and we'll go from there.
Even after the
I don't think we can do that. Anyway, we have to continue the show here. The close as we count you down to those closing bells. Just about 23 minutes left to go here. A conversation up ahead with the CEO and founder of Meta, Mark Zuckerberg. Emily Chang had a chance to sit down with him, even had a chance to go windsurfing with him. We're going to hear from her in just a second after the break. This is The Close on Bloomberg. Welcome back to The Close. A focus on big tech today with Alphabet and Tesla earnings after the bell. We have to wait about one more week before we hear from Meta. But our very own Emily Chang, she actually had a chance to catch up with Mark Zuckerberg. She talked to him about what's going on in the AI space, its new Llama 3.1, and updating its Meta AI service billed as a rival to ChatGPT. As part of Emily Chang's new show, The Circus, she had a chance to check up with Zuckerberg on both land and sea, I'm told. Take a listen as to what they had to say.
So you're releasing Llama 3.1, this family of models, big and small, including the biggest open source model ever, 405 billion parameters. What does that jump unlock?
I actually think the main thing that people are going to do, especially because it's open source, is use it as a teacher to train smaller models that they use in different applications. If you just think about all the startups out there, or all the enterprises, or even governments that are trying to do different things, they probably all need to, at some level, build custom models for what they're doing. And it's really hard to do that with closed systems out there, whether that's OpenAI or Gemini, Google's thing, or whatever. And this is gets to a pretty core part of our philosophy is we don't believe there's going to be one AI to rule them all. Our vision is that there's going to be millions or just billions of different models out there.
So not one God, but many? Is that the way to think about it?
Well, I don't think they're going to be gods, but I do think that to some degree, if you're an organization and you think you're going to create this one super intelligence, it does have this feel to me of people trying to create a god, and that's just I find that both the wrong way to look at it, but just also very unappealing. There's almost 200 million creators on our platforms. They all are trying to build their community. People want to interact with them. There aren't enough hours in the day. I want to make it so that every single one of them can easily train an AI version of themselves that they can make it what they want. So it's almost like a kind of artistic artifact that they're putting out there for their community that allows their community to interact with them, but also gives them control over how that interaction happens.
Facebook and you have been blamed for a lot of things, whether you agree or not. Why should we trust you with AI?
Well, it's a loaded question. We have gotten blamed for a lot of things. And look, I take our role in all this stuff seriously, and I think we've tried to handle all this as well as possible. I'm not sure that it's all been fair, but I'd like to think that we're an important and relevant company, so I think the scrutiny is generally healthy. One of the defining things around open source is that anyone can scrutinize the work. And because of that, I think it just puts a lot of pressure to make sure that the quality of the work that you're doing gets better really quickly.
Emily Chang, host of The Circuit, joins us now. Hey, Emily, just to sort of jump off on that, Zuckerberg's playing from behind with ChatGPT and Gemini. How does he catch up?
Well, and he acknowledges that his models haven't totally closed the gap on ChatGPT and Gemini, but they say they're already working on Llama 4, and he believes that will completely close the gap. What's interesting is Meta AI, if you look across Facebook's products, they just have so much scale that this is something that he can scale really quickly. He said that their chatbot, which it's built into all their products now, and it is also a standalone chatbot, will be the most used chatbot by the end of the year. It already has hundreds of millions of users, and that's because they can just instantly scale things like this so fast. And so, obviously the models have to get a little smarter, but they're going to have this incredible reach that he believes is going to give them the leg up in the future.
Look, Emily, I know you talked to him about a lot of really important and critical stuff, but I have to point out two things. First of all, we're looking at pictures of him. He clearly has gotten a little cooler with that gold chain and the tousled hair. And you also had a chance to go out to one of his homes out there. I think it was on Lake Tahoe. And I watched this episode. You actually went out there and did what I'm told is wakeboarding, not water skiing or whatever I said before. But you actually got out there in the water with him. And we've seen some of his social media posts. This seems to be a favorite pastime for him.
This is one of his side quests. It's something that he has learned how to do and is now incredibly good at it. Priscilla joined us, his wife, and he taught me. So I got to see what Mark Zuckerberg is like as a teacher, and he was actually super patient and gave me a lot of tries, and I barely escaped with a shred of dignity, but I did it. You'll have to watch the full episode to see. But in general, like, how does this tie into his leadership? What I learned, he just has like a ton of energy. Yeah. And all of these activities help him burn off energy and ultimately help him focus. But he said what he really cares most about is building. Yeah. And he's not going anywhere. All right, he's not going anywhere. All
right, Emily, we have to leave it there. I encourage everyone to catch this wide-ranging interview that she had with Mark Zuckerberg, including that visit out to his retreat in Lake Tahoe. It's The Circuit with Emily Chang. It airs on Bloomberg Television, 6:30 p.m. and 8:30 p.m. New York time. This is Bloomberg. Welcome back to The Close. A focus on big tech today with Alphabet and Tesla earnings after the bell. We have to wait about one more week before we hear from Meta. But our very own Emily Chang, she actually had a chance to catch up with Mark Zuckerberg. She talked to him about what's going on in the AI space, its new Llama 3.1, and updating its Meta AI service billed as a rival to ChatGPT. As part of Emily Chang's new show, The Circus, she had a chance to check up with Zuckerberg on both land and sea, I'm told. Take a listen as to what they had to say.
So you're releasing Llama 3.1, this family of models, big and small, including the biggest open source model ever, 405 billion parameters. What does that jump unlock?
I actually think the main thing that people are going to do, especially because it's open source, is use it as a teacher to train smaller models that they use in different applications. If you just think about like all the startups out there, or all the enterprises, or even governments that are trying to do different things, they probably all need to, at some level, build custom models for what they're doing. And it's really hard to do that with closed systems out there, whether that's OpenAI or Gemini, Google's thing, or whatever. And this is like, gets to a pretty core part of our philosophy is we don't believe there's gonna be like one AI to rule them all. Our vision is that there's going to be millions or just billions of different models out there.
So not one God, but many? Is that the way to think about it?
Well, I don't think they're going to be gods, but I do think that to some degree, if you're like an organization and you think you're going to create like this one super intelligence, it does have this feel to me of like people trying to create a god, and that's just I find that both the wrong way to look at it, but just also very unappealing. There's almost 200 million creators on our platforms. They all are trying to build their community. People want to interact with them. There aren't enough hours in the day. Like I want to make it so that every single one of them can easily train like an AI version of themselves that they can make it what they want. So it's almost like a kind of artistic artifact that they're putting out there for their community that allows their community to interact with them, but also gives them control over how that interaction happens.
Facebook and you have been blamed for a lot of things, whether you agree or not. Why should we trust you with AI?
Well, it's a loaded question. We have gotten blamed for a lot of things. And I mean, look, I take our role in all this stuff seriously, and I think we've tried to handle all this as well as possible. I'm not sure that it's all been fair, but like, I'd like to think that we're an important and relevant company, so I think the scrutiny is generally healthy. One of the defining things around open source is that anyone can scrutinize the work. And because of that, I think it just puts a lot of pressure to make sure that the quality of the work that you're doing gets better really quickly.
Emily Chang, host of The Circuit, joins us now. Hey, Emily, just to sort of jump off on that, Zuckerberg's playing from behind with ChatGPT and Gemini. How does he catch up?
Well, and he acknowledges that his models haven't totally closed the gap on ChatGPT and Gemini, but they say they're already working on Llama 4, and he believes that that will completely close the gap. You know, what's interesting is Meta AI, just, you know, if you look across Facebook's products, they just have so much scale that this is something that he can scale really quickly. He said that their chatbot, which, you know, it's built into all their products now, and it is also a standalone chatbot, will be the most used chatbot by the end of the year. It already has hundreds of millions of users, and that's because they can just instantly scale things like this so fast. And so, you know, obviously the models have to get a little smarter, but they're going to have this incredible reach that he believes is going to give them the leg up in the future.
Look, Emily, I know you talked to him about a lot of really important and critical stuff. But I have to point out two things. First of all, we're looking at pictures of him. He clearly has gotten a little cooler with that gold chain and the tousled hair. And you also had a chance to go out to one of his homes out there. I think it was on Lake Tahoe. And I watched this episode. You actually went out there and did what I'm told is wakeboarding, not water skiing or whatever I said before. But you actually got out there in the water with him. And we've seen some of his social media posts. This seems to be a favorite pastime for him.
This is one of his side quests. It's something that he has learned how to do and is now incredibly good at it. Priscilla joined us, his wife, and he taught me. So I got to see what Mark Zuckerberg is like as a teacher, and he was actually super patient and gave me a lot of tries, and I barely escaped with a shred of dignity, but I did it. You'll have to watch the full episode to see. But in general, like, how does this tie into his leadership? You know, what I learned, he just has like a ton of energy. Yeah. And all of these activities help him burn off energy and ultimately help him focus. But he said what he really cares most about is building. Yeah. He's not going anywhere. All right. He's not going anywhere. All right, Emily, we have to leave it there. I encourage everyone to catch this wide-ranging interview that she had with Mark Zuckerberg, including that visit out to his retreat in Lake Tahoe. It's The Circuit with Emily Chang. It airs on Bloomberg Television, 6:30 p.m. and 8:30 p.m. New York time. This is Bloomberg.
I think the alphabet numbers are going to be critical here. We need to see whether or not that Mag 7, the big tech, continue to drive the market. They've clearly been the driver for the last year and a half. And if we're going to continue to see the index power ahead, they need to continue to produce. And clearly a lot of enthusiasm behind those names. They need to deliver.
George Maris, the CIO over at Principal Asset Management, kicking us off to the close just about 50 minutes ago with a push ahead to maybe what happens in about 10 minutes when we get those results, Alex Steele, out of Alphabet. I'm excited. You know what's also exciting? The Russell continues to outperform. Yeah. I mean, S&P is going nowhere fast, but the Russell's up over 1% again. On the downside, though, energy stocks are now up by 1.5% in the S&P, and UPS just continues to get smoked. Well, that's the dichotomy that we're seeing, though, right? I mean, you mentioned this earlier on, at least on the energy side, that this might be some concern about the industrial economy over there in China. And with UPS, I guess that's more of a U.S. economy story. So why am I supposed to be excited about small caps? I don't know. I think that's actually a really interesting point, because it's the same thing goes to where the Fed cuts. Because if you're going to cut, which is good for small caps, are you cutting because the economy is weak? In which case, is that good for small caps? That one always gets me to be a bit of a head scratcher. Yeah, you see it there. UPS, the worst decliner on the day, at least among the major big cap companies, down about 13%. We'll see if all that changes over the next few minutes. Remember, in addition to Alphabet, we're going to get Tesla earnings as well as Texas Instruments. Let's get a read here on some of the market moves on the day and maybe some of the market moves up ahead with Stephen Suttmeier, Director and Chief Equity Technical Strategist at Bank of America Securities. Hey, let's start off, Steve, talking about this rotation here and kind of what actually drove that. Because obviously some of it is based on interest rates, the macro and fundamentals, but there were some technical tailwinds, I should say, that also seem to have sparked that rally. Definitely. We've seen a nice broadening out. We see some bullish rotation. We're talking about small caps, the Russell 2000. We've had investors doubting the breakout. But when we look at that particular chart, we just noticed a surge in new 52-week highs as that index has broken out from its two-year base. So we actually think small caps do have legs here on an absolute basis, and maybe even more legs relative to the S&P. So they're looking good. When you talk about the momentum behind that trade, is there evidence that you can see in the data that shows that this is sort of broad-based? I don't mean broad-based in terms of the number of stocks, but broad-based in terms of the types of investors piling into it. I think, when you're looking at the types of investors, we have some fast money investors, chasing the rally. But I think when you look at positioning from asset managers and leverage funds,
there's still room for the broader equity market rally to move higher. I mean, if we look at that data on the S&P in particular, they confirm the rally. So you see asset managers, buying as the market has gone up, which they tend to be more on the correct side. Then you see the leverage funds, which tend to be more incorrect, and they've been increasing their shorts as the market rallies. So I think there's a little bit more room to go here.
If you take a look at the Russell 2000 and moving indices, there's a big gap up. Do you think we have to go back and fill it, or do you think we can continue from here?
There's a chance that could very well be a breakaway gap, which is a bullish technical pattern that if you do back and fill, that gap should act as some support in the market. So the Russell 2000 has support roughly around, actually, in front of that gap around 2130 to 2100, and the gap's just below that. And, resistance is at the old highs. But I think you can see 2620 on the Russell based on this pattern that we just broke out from.
When?
That's a great question. I mean, it's probably sometime in the next 6 to 12 months. I mean, sometimes, though, if there's a lot of money being forced into these smaller names, it can happen quicker.
What about for the broader S&P?
Well, the broader S&P obviously has taken a back step. We hit a target that we've had out there around 5,600 in that range, cup and handle breakout from last year above 46. So we were happy to see that, but we hit a wall in that range. And we hit it just as everybody got what they wanted, broadening out, improving breadth and all that. So I think, obviously it's driven more by the tech sell-off, and we'll get more answers on the mega cap growth stuff in a few minutes. So, I think that's one main driver of it, but it's also encouraging to see other stocks come in and start to take on leadership, some selective financials, industrials, and a few other names. So I think, it's really important not for tech to just roll over and die.
Right.
It has to, participate, but may not lead.
But on that point here about the potential for big tech to provide a lift to the broader market, what do correlations, single stock correlations look like right now? Because there's been so much talk about how this has become much more of an idiosyncratic market. And I know with the mega caps, they have such an outsized share in the indices that, a 2 or 3% move is going to lift or drop the whole market. But are those correlations still strong on a single stock basis?
I would say there's a lot of dispersion. Every sector I look at has stronger stocks and weaker stocks. So it doesn't matter whether a sector has been lagging, like, materials, for instance. There are some stocks that look really good there. Some stocks look really bad. Even in tech, you got some stocks that look bad too. It's not every tech stock going up, but I think it is very idiosyncratic, and we're hoping it becomes less so in the future. We're hoping that because we are believers in the bull market. We like the secular trend, the cyclical trend, mid-cycle in both. So the next part of this rally could very well see, it may not be just about mega cap growth and tech. You may see some other groups, other sectors start to do better, and we're seeing signs of that over the last month or so.
I know that right now everyone's focus, their head is right now in the earnings season, but as we kind of look ahead to the election cycle, as well as the typical seasonality you get in the summer where we start to see volumes and price action drop off here, what are you anticipating in terms of, I guess, not so much whether the market goes up and down, but I guess the volatility that we might see over the next few months?
Yeah, I would think you get downside volatility ahead of the election, because we are in the midst of that election year summer rally, which tends to be very strong. Election years, the summer is the strongest part of the year. It's actually amazing how that works. And then people start to think after the summer, oh my God, we got this election coming up. Uncertainty, investors don't like that. Typically, downside volatility increases during those periods. So that typically sets up what you normally would get is a post-election relief rally. And we ran the data. It doesn't matter who wins or loses. It's really just, the fact that it's over, people are relieved. And you can rally into your end. So I think up in the summer, maybe in the mid to late stages of that summer rally now, and then a dip in September, October typically is what happens, and then it sets up that year-end rally after the election.
All right, Steve, great stuff. Great to have you here in studio, too, at Bloomberg headquarters. Stephen Suttmeier, Chief Equity Technical Strategist over at Bank of America Securities, here on another interesting day where we actually see the broader market and tech stocks, for that matter, on the back foot once again. The lone bright spot out there is the Russell 2000, up 1% on the day.
Yeah, go figure. And that move that you could potentially see on that breakout, to over 26, that's a huge move. That would be like a real confirmed rotation that we've been waiting for years, it feels.
Yeah, and I wonder if this is driven by some of those idiosyncratic fundamentals, or if this is more that broader macro story, the idea that as interest rates drop, that provides a reprieve for a lot of those names that were, as I think one of our previous guests, George Maris, talked about being over-leveraged.
We just got to have the earnings that come through, right? So you got to have not a lot of debt maturity wall that's coming, and you got to have the cuts, and you got to have the earnings. If you deliver those three, we can probably get one, right?
Yeah.
We're expecting the cuts. The other two, we got to suss out.
All right. Well, speaking of earnings, we are going to get Alphabet after the bell tonight. We're also expected to get Tesla, Texas Instruments, Visa, Chubb, Capital One.
Capital One, yep.
And Mattel. I'm not trying to be dramatic. I'm just trying to remember
what
they all are.
I hear you, because to that point, there's a lot.
Yeah, all right, we are moving closer to those closing bells. Our full coverage of all the day's market action and all the earnings after the bell, it starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, taking you through the closing bell. It's a global simulcast, starting now with Scarlet Fu joining us in the TV studio, Carol Masser and Tim Stenovic in the radio booth, as we bring all of our audiences across all of our platforms together, including our partnership with those folks on YouTube. Carol Masser,
yes.
Another interesting day here, giving back a lot of the gains from yesterday on the tech side, but on the small cap side, that rally continues on.
Yeah, interesting to see. We just had a guest on who just talked about the move up that we've seen, certainly in the small caps, the rotation that's happening. How he said, was it like 70% of the names in the Russell
2000
are now above their 200-day moving average, just showing the momentum that we've seen in that space.
Yeah, that rotation continuing. That's Jimmy Lee, the founder and CEO over at the Wealth Consulting Group. I don't know about you guys, but earnings season in full swing. We are awaiting numbers from Texas Instruments, Alphabet, Tesla, Capital One, Visa. And that's just the ones reporting in the next few minutes.
Yeah, that's the heart of earnings season, right? This is when we start to get a narrative on what's going on. What's going on within equities, and I'm saying this now because I don't know if we're going to have time to get to it, is even though we're looking at modest losses in the S&P 500, by and large, most of the sectors in the S&P are down. And the only groups that are bucking the decline, materials and financials, and barely at that.
Yeah, and energy just keeps rolling over to the downside here. It looks like it's having a hard time catching a floor today. I think it's almost $6 trillion worth of market cap comes out with earnings today. We got a bunch in the morning, and now we wait for the afternoon.
On a cross-asset basis here, we should point out, looking at a mixed day for yields, pretty much down on the shorter end of the curve by a basis point or two, a drop in Bitcoin. A little bit of weakness that we're seeing in the dollar on some levels, particularly when it comes through some of the more developed market countries, and a drop that we're seeing in oil as well. As for equities, you're seeing red across the screen for the Dow, the NASDAQ, and the S&P 500. Fractional losses on the day, 0.1% on the Dow, about 0.2 on the S&P, and barely, not even a whole 0.1% on the NASDAQ. Your outperformer on the day, that belongs to the S&P 400 mid caps, up 0.2%, and the Russell 2000 small caps, up 1%.
All right, so a little bit of outperformance by the small caps. As you mentioned, there remain S&P ending the day. Little change, as Scarlett mentioned earlier, though. We've seen most names and most groups lower today. 315 names in the S&P trading lower today. Scarlett, 186 to the upside.
Yeah, I mentioned two groups bucking the decline. Actually, it's turned into three. You have consumer discretionary, unchanged right now, but just in the green column. Materials and financials are the three groups that did advance, and as Alex mentioned, energy down 1.6% on the day.
All right, guys, as we await those earnings, quick check on some of the individual gainers. GE up almost 6% in today's session. Second quarter profit was a jump, raising its guidance for the year. So we did see some outperformance there. Pentair, also another one that outperformed, up almost 9%, a top gainer in the S&P 500. And this company reported second quarter sales and adjusted EPS that topped expectations. All right, let's get to it. Texas Instruments out, folks. A read on the semiconductor space. So let's get to it. Second quarter revenue, it is smack on, $3.82 billion. That's exactly what the street was expecting. Second quarter EPS, $1.22 a share versus $1.87. That's year over year comparisons. Let's get to the outlook. Third quarter revenue, $3.94 billion to $4.26 billion. The estimate is $4.14 billion. So it's up about 2.2% here in the post-market trade here, Tim. So investors at least liking certainly the outlook. Some maybe surprise to the upside there.
Okay, in the press release, we actually are getting some more numbers talking about the SG&A spend over the last 12 months, investing $3.7 billion in R&D and SG&A, investing $5 billion in CapEx, also returning $4.9 billion to shareholders. Revenue did decrease 16% from the same quarter a year ago and increased sequentially. Industrial and automotive continued to decline sequentially, while all other end markets grew, Scarlett.
Yeah, and I'm just looking at the outlook here once again, $3.94 billion to $4.26 $6 billion. That's a wide range, but within there, the midpoint is $4.1 billion, and the consensus estimate was $4.14. So if you want to split hairs, it might be a touch lighter than what analysts had been anticipating. EPS for this quarter, the third quarter, $1.24 to $1.48. The consensus was $1.38. And we do have Alphabet crossing as well. Let's get you the second quarter revenue numbers. $84.74 billion. That is higher than what was anticipated, which was $84.37 billion. Second quarter earnings per share of $1.89 does top the consensus estimate of $1.84. In terms of the ad revenue, that's the lion's share of the company here, $64.6 billion. Alex, analysts were expecting $64.5 billion, so better than expected for its core business.
So just taking a look at the YouTube ad revenue, we just break that out. That's coming in at $8.66 billion. That is a little lighter than the estimates, though, but that cloud revenue just really delivering, that coming in at $10.35 billion. So just as a broad stroke for that. I'm waiting to see about the gross margins. I don't see them out yet, but I'm sure they are, but we have to dig through them.
Tesla earnings also crossing the wire right now. Let's walk you through them. Their second quarter revenue coming in at $25.5 billion. That beats the average of street estimates of roughly $24.6 billion. Adjusted EPS, though, is a miss. EPS coming in at 52 cents a share. The street was looking for 60 cents a share. Operating income also coming in light, 161. Right now, the street was looking for $1.81 billion. The company giving some guidance here about their cost reduction efforts, saying that their focus remains on company-wide cost reductions, and also says that its plans for new vehicles remain on track. Of course, that will be much more of the conversation when we get to that conference call, less about these numbers and much more here about the model lineup and what changes, if any, Elon Musk has in store.
Yeah, that's what investors want to see. They want to know what new cars are coming, because those cars, to a lot of investors and observers, are getting a little long in the tooth. Shares of Tesla unchanged right now. They were down as much as 1.4% in the after hours, which is what we're seeing right now, about 2% in the after hours. Focus remains on company-wide cost reduction. As Romain said, the plans for new vehicles remain on track. The sooner the better for investors, though. Second quarter revenue coming in above estimates at $25.5 billion. Estimates were for $24.63 billion. Gross margin coming in above estimates, too, at 18% versus estimates of 17.4%.
All right, folks, let's go back to Alphabet, because this is certainly one that's going to be possibly an indicator of what we're going to see from other names in the space, the big cap space, and certainly the advertising. So among the standouts, among the headlines, we did see second quarter revenue. That was up. Google Cloud revenue. Keep in mind that they are behind what we're seeing in some of the other big players. Microsoft, I'm thinking about Amazon, but their cloud revenue was a beat, $10.35 billion versus $10.09 billion. We're continuing to see Alphabet up about 2.3%. Again, second quarter revenue overall, ex-tax, $71.36 billion. Again, that's a beat. The estimate on the street, Alex, was $70.7 billion. Again, Alphabet in the aftermarket up about 1.2%.
All right, taking a look at Capital One here, their total deposits for the second quarter beat estimates, coming in at $351.44 billion. So beats by a smidge, by about $6 billion there. You also have adjusted earnings coming in slightly better, net revenue coming in a little weaker than estimated, but still right around there, coming in at $9.51 billion. Those shares unchanged right now.
All right, let's take a look at Visa, also reporting results here. Third quarter adjusted EPS, $2.51. That does top the consensus estimate of $2.43. And right now, we're looking at the stock moving slightly higher in the after-hours trade as we wait for more details across.
Yeah, and I'd be interested to see get a better read on consumer spending. They talk a lot, of course, on the conference call about the complexion of where those transactions are made here. So it'll be interesting to see whether some of the concerns that were raised by the earnings that we got out of names like Kimberly-Clark, out of UPS earlier today, whether that's indicative of a broader slowdown in consumer spending.
Hey, guys, I'm still digging into what's going on over at Tesla, because robotaxi update is also what investors are looking for. The timing of the robotaxi deployment, according to the company, depends on technological advancement and regulatory approval. They're working vigorously on this opportunity, given the outsized potential value. As Ronad Ludlow points out on the live blog, they don't see a date on the robotaxi event or a timeline for rollout. But you will recall a few weeks ago, we did report that the company has pushed the rollout by a couple of months.
All right, so Tesla down 2.7% here in the aftermarket. Another headline coming from the release, expected expecting, Tesla that is, expects a sequential increase in production in the third quarter, right? This is important to kind of get an idea of what they are anticipating in terms of demand, what they can kick out. But again, keep in mind the big headline, and maybe that's why investors are disappointed, that second quarter adjusted EPS, 52 cents a share. Alex, that's 8 cents light.
All right, I'm taking a look at Mattel here. Those numbers coming as well. Let me just check it here. EPS beat estimates for Mattel, coming in at 19 cents a share versus 10 cents. The estimate was for 7 cents. Net sales coming in just over $1 billion. That's down by about 0.7% year on year. And gross billings coming in at $1.2 billion.
Yeah, we're going to be talking with the Mattel CEO, Ynon Kreiz, tomorrow on our show. I do want to mention NASDAQ 100 E-mini futures in the aftermarket. Little change, a little bit lower, just kind of watching how this might ultimately, all of this, especially Alphabet's results, might impact. I will point out Texas Instruments up about 4%, so certainly interesting to watch the semiconductor area. All right, guys, lots of news, earning news coming here after the close. That's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We call it Closing Bell. We will see you again, same time, same place tomorrow. Alex, we know she's going to go away, but she's going to be back with us tomorrow as well. All right, everybody, that's a wrap.
Our earnings coverage will continue right here on Bloomberg Television. Some of the biggest gainers here in after hours trading: Enphase, Texas Instruments, and Seagate. Tesla, one of the biggest decliners. Full coverage up next, right here on The Close on Bloomberg.
Welcome back to The Close. I'm Scarlett Fu.
And I'm Romaine Bostic. Kind of a tepid day when it comes to the price action, at least for the headline indices, but there was a lot of volatility and ructions underneath the surface. The end result of it all, though, was a Dow, an S&P, and a NASDAQ down fractionally on the day, but look at the performance, the outperformance, if you will, of the Russell 2000, up 1% here on the day here as it continues that streak here of really outpacing the broader market. Maybe, Scarlett, this is a bet here on better economic conditions, maybe just a bet, of course, on a drop in interest rates, but we had some earnings this morning, including from some big consumer names like Kimberly-Clark and UPS, that seemed to push back against that narrative.
Absolutely. Let's start with UPS because it was the worst performer in the S&P 500, falling the most ever at one point after lower than expected second quarter profit due to wage inflation as well as weakened demand from consumers. The silver lining here, I suppose, is even though profit fell, volume did grow for the first time in 9 quarters. So maybe it's at a turning point. It's not clear yet. We're also looking at Spotify, up 12% on the day. It did rally as much as 16%. The audio streamer reported quarterly subscriber growth of 12%. That did top analyst estimates. But the beat follows moves to cut costs dramatically, also reduce its workforce, and pull back on a lot of podcast production. All right, let's switch up to the after-hours trade right now because it was earnings palooza over the last 10 minutes. We heard from Alphabet, Tesla, and Texas Instruments. You can see Alphabet lower by 1%. Second quarter revenue, when you back out the cost to acquire traffic, acquire customers, did beat analyst estimates. That is a flip, actually, from earlier because it was up. Ad revenue, that, of course, is its main business, along with search revenue, did top analyst estimates, but YouTube revenue trailed analyst estimates. And Tesla lower by 2.5%. It was bouncing around a lot. The second quarter earnings per share did miss analyst estimates, but Tesla does say it sees a sequential increase in production. Remember, it had pre-announced deliveries were declining, and it does say that its plans for new vehicles remains on track. We'll get more details, obviously, from the CEO, Elon Musk, during the earnings call. And Texas Instruments, it's been up since it reported results, and it remains up by 4% right now. It gave an inline forecast for this quarter, so that did calm concerns of a downturn in the chip sector.
All right, let's go back actually to Alphabet here. Shares right now down about 0.7% here. Of course, that headline number with revenue coming in at about $84.7 billion, ex-TAC about 71.36, but the margin improvement seems to be one of the bright spots out there for the company, at least for this particular quarter. Melissa Otto joining us right now, head of TMT research at S&P Global Visible Alpha, to break down what we learned here out of those earnings. What jumped out at you, Melissa?
Hi, thank you. S&P Global Visible Alpha consensus was looking for $84.3 billion in total revenues, driven by $47.6 in search, $7.8 billion in Google Network, and $9 billion in YouTube revenues, and then cloud $10.2 billion. So I think you can see sort of a mixed result there. Cloud coming in at 10.4, so a little bit better, but YouTube at 8.66, a little bit soft there, and then the other businesses broadly in line with expectations.
On the ad front, particularly when it comes to YouTube here, I mean, what do you think accounted for that softness? And we should say softness is very relative in that use of the phrase.
It's a tough environment at the moment. I think one of the takeaways that we heard from the Kagan Media and Telecom Summit last week was that overall ad spend is trending a bit on the soft side. And I think, maybe we see a little bit of that coming in to the broader market and it impacting their business a bit. I'll be very keen to hear what management has to say about the outlook and how we should be thinking about the granularity of that for both the quarter and the rest of the year.
I'm wondering also, Melissa, how much do tough comparisons from last year play a role here in terms of maybe cooling investor expectations for what they can actually get this quarter?
Indeed. I mean, the company has done quite well in the first half of this year on the back of those robust expectations from the second half of last year. So I think, as we look into the second half of this year and into 2025, investors may be saying, we want to see companies that are both beating in the quarter and beating in terms of what the outlook is being expected. So for Q3 right now, consensus is expecting $1.85. And then looking for the full year, $7.63. So I think those are broadly where the market is pricing at the moment.
And of course, we should mention as well, this will be Ruth Porat's last quarter as the CFO. Of course, her successor will take the job at the end of July, and she is going to move on to a bigger role within Alphabet. Part of that, and whether this is under her direct jurisdiction or not, is looking into how Alphabet can continue expanding. Alphabet has tried to make some purchases of late, but it hasn't really made much headway. Is this because of antitrust concerns, or is it just a tougher environment for it to get a deal done because other companies have the opportunity to go public now that things have stabilized a bit?
It's hard to say. I think it's a complicated environment for M&A at the moment. I think one of the areas I would point to that will be compelling for investors is to look at the unallocated and other bets line items. That business is projected to generate losses of $2.5 billion this quarter, and it'll be interesting to see how that shakes out for the second half. That is one area of Google's business model that I think investors are trying to get their head around in terms of how could that business those business lines become more efficient and ultimately drive better earnings per share.
We should point out, too, here that we talk about the AI story and some comments coming from Ruth Porat, a call that she's doing right now with our reporters, talking about how cloud revenue was boosted by that demand in AI. I'm wondering, Melissa, when you look at the AI landscape, and I'm not just talking about with Alphabet, really beyond that into the larger tech space here, all the hype, all the momentum, are we going to start to see that show up in these earnings reports on a fundamental basis, a boost from AI?
That's the million-dollar question. I mean, we've seen amazing upward revisions. We've seen NVIDIA just, the sky's the limit with that stock. I think so much demand for their solutions around accelerated computing for generative AI. Now, the question now is, okay, what's going to create broad adoption? How will consumers and enterprises integrate AI, generative AI, into their workflows, their day-to-day lives in a way that makes them more productive and more satisfied users?
Mm-hmm. I mean, and part of the whole AI story, the AI narrative, the unfortunate reality is that there's a lot of spending that has to happen in order for them to deliver on that. And CapEx in the first quarter was about $12 billion. That was a big, big jump. And Alphabet had pre-announced they would stay at roughly those levels. The numbers for the second quarter show CapEx was $13.19 billion. So a good $1 billion more than what analysts had been anticipating. Is that the kind of trajectory that investors are willing to tolerate?
Yeah, that's the question. I mean, I think ultimately what the investment community has been willing to absorb the higher CapEx numbers with the idea that revenues are going to come. And I think what we would like to see in the earnings call and then going forward is a lot more specifics around what's ultimately going to drive that revenue growth and how it's going to come to fruition.
Yeah, absolutely. Melissa, really appreciate your joining us. Melissa Otto is head of TMT research at S&P Global Visible Alpha. And remain continuing to look at Alphabet and its numbers. I go back to the other bets. I really would like a detailing, an itemization of what's in the other bets category.
I don't. I'm over other bets. I'm over it. Remember when they made a big deal about putting this out there, other bets, so we would finally see all the big moonshots, and then of course they didn't really tell us anything
the innovation part
other than that it was losing money every single quarter. I mean, I don't know. It'll be interesting to see with Ruth moving on to, I guess, a more investment type of role, I guess. Is that the best way to describe it? Maybe we see a little bit more juice in that, and it'll be interesting to see with the new person coming in, what she's able to do, and how it all balances out, because it is kind of that give and take, right? You can only put so much money into this without actually showing a return at some point or another.
Right. And to that end, other bets operating loss $1.13 billion. Analysts were looking for a loss of $1.07 billion. So
are they building a car or something? What about a foldable phone?
A self-driving car?
How about a foldable phone? Yeah, I hear that's all the rage.
Yeah, I'm not looking for one. Are you?
No, but honestly, every phone's foldable if you really try.
Coming up, we've got more earnings breakdowns on the way. We're going to talk about Tesla, Visa, Capital One, and Texas Instruments. You can see them all moving in the after hours. They're all down except for Texas Instruments. This is The Close on Bloomberg. We have been hit with a tide of earnings since the top of the hour, so let's get you a roundup of some of the notable movers and bring in Bloomberg's Bailey Lipschultz, Abigail Doolittle, and Emily Graffeo. Let's start with Bailey, who is on Tesla duty.
What a privilege, Scarlett. Stock down 3.3%, this coming after another quarter of profitability, falling short of what analysts were looking for. One thing that stood out to me in the commentary, the company still sees a notably lower volume growth rate for 2024, so making less cars, and that's hitting the bottom line for the company. One thing that did stand out focuses on the ability to tighten in spending. Capital expenditures, $2.27 billion. Below estimates for $2.54 billion, though. Top line, looking at that adjusted EPS, 52 cents. Estimates were for 60 cents. So stock down 3%, had been up about 35% in the month prior. So maybe some investors taking some gains, but that's why you're seeing Tesla down right now. Abigail, what are you watching?
Well, let's take a look at the financials, because both Visa and Capital One have reported, and very interesting, the options on Visa going into the quarter suggest that we would see a 3% move up or down. We have it to the downside almost. They missed revenue. They beat earnings. They put up $2.51 versus the estimate of $2.43. That's 9% growth, and it also was on strong consumer spending. But investors really not liking that revenue miss, and also payment volumes. We need to check into those a little bit. To the downside also, Capital One down 1.7%. Another mixed quarter there. Their adjusted earnings of $3.14 missed the estimate ever so slightly. Sales a little bit better. Total deposits be on the year up 11% into this, so maybe similar to what Bailey was just talking about. Emily, a little profit taking here for both Visa and Capital One. What are you checking out?
I'm looking at Texas Instruments, because the chip maker is up almost 4% after reporting earnings. The revenue came in line with estimates, though down 16% year over year, marking the 7th consecutive contraction after the company said that its industrial and automotive segments declined sequentially while other end markets grew. Meanwhile, the outlook for the current quarter was in line with estimates, perhaps adding to that stock pop. They said sales will be $3.94 billion to $4.96 billion for the quarter, really proving that chip makers are back on a path towards growth after a lot of those suppliers that dealt with automotive and industrial segments saw a big inventory glut and a slowdown here. I think zooming out, the stock higher today, but a story that not all chip stocks are alike. This stock only up 8% over the last year, compared to, of course, NVIDIA's 175% rise. Romain and Scarlett.
All right, our thanks there to Emily, Abigail, and Bailey. A closer look here at some of the big earnings. A few others just to stay in the computer space here. Seagate Technologies also out with results. Of course, a big maker of storage drives here, up about 5%. A big beat there with about an 18% jump in revenue. And do you like eggs, Scarlett?
Yeah, I love eggs.
Okay, well, apparently no one else loves eggs because Cal-Maine, of course, is one of the biggest, or probably the only publicly traded egg producer that I know of, at least. Net sales down 7% in the most recent
Maybe
quarter.
everyone's going organic.
Or are they? I don't know. I never thought about that.
Maybe
they're just not eating
eggs.
Anyway, those shares are down 2%. Obviously, a less consequential company, but nevertheless, here a nice read on tech and a good read as well on some of the, I guess, quote unquote, real economy.
Yeah. Well, I mean, Alphabet and Tesla are real economy. I see a lot of Teslas driving around. The big question is whether whatever the numbers came out, whether Elon Musk changes the narrative completely when he starts speaking on the earnings conference call. That tends to happen, with Tesla.
Yeah. Well, I mean, this is a narrative stock, right? I mean, it's never really been about the fundamentals so much as it is about the longer-term story, the moonshot, if you will. And Elon Musk has always been a master at sort of mapping out a future that doesn't always come true, but he gets people on board with it, and the goalpost moves as well here. I think we're going to talk a little bit more about Tesla in just a bit, and Alphabet as well.
Yeah.
Those shares have been oscillating between gains and losses.
Now
you can
higher.
See Alphabet shares up about 1% on the day. Tesla at one point was down almost 5%, so pairing some of its losses here. A fuller breakdown here of what's going on with both of those companies, as well as what CFO Ruth Porat has to say. That's coming up after the break. This is Bloomberg.
Alphabet shares bouncing around in the after-hours trade. They're currently higher right now. So let's bring in Bloomberg Technology co-host Ed Ludlow, who had been listening in to the earnings call where the CFO, Ruth Porat, spoke in what would be her last call before she departs and hands the reins to someone else. And Ed, I know she talked about a lot of things, but one thing that's top of mind are headlines that had been crossing in the days leading up to earnings, which is what's happening with Alphabet and its M&A ambitions.
Yeah, we asked Ruth Porat about Wiz, and explicitly she said, I will not comment on speculation. But she and I got into the idea of, well, if you are open-minded to M&A, why would you be? And you can see the quote on the screen. This is in the context of cloud. So while she didn't engage on Wiz, this is pretty clear that I think Google Cloud Platform will continue to look at M&A in ways that kind of round out the offering because they're a number 3 player in the market. And while this was the first quarter that exceeded $10 billion of revenue in a quarter for cloud, and the bottom line looks strong too, they're still trailing AWS and Microsoft Azure, so M&A seems to be an option.
I am curious. I mean, not to just completely beat this horse, because I know she doesn't want to talk about it, but the Bloomberg reporting kind of made it clear that it was Wiz that decided that maybe it was better for them to walk away, particularly in the wake of that CrowdStrike debacle last week, and the idea that everyone now wants to see what other cybersecurity companies or potential stocks out there that could be valuable here. Was there any credence to that? Did anyone ask her about that?
They did, and part of the reporting from Bloomberg, right, was that the rationale for Wiz to walk away was also from an antitrust perspective. There's an argument that maybe as the third place player in that market, they might have an easier time of it. But Porat's response was, whoever ends up being in office in the context of the election later this year, we work with government and we still are looking at M&A opportunities. CrowdStrike not explicit about and didn't respond on.
Okay, let's talk about search, because that is Alphabet's bread and butter. That's where it makes most of its money. And the anticipation is that all that spending on AI is going to drive revenue growth in advertising. Did we get that?
Yes. Yeah, so overall, what we know explicitly is that the biggest driver of top-line growth was the core search product. We asked Ruth Porat if they're talking about the new generative AI version of search or just search broadly, and she wouldn't engage on that. I think she's probably going to speak more about it on the call that starts in a little while. But she did say that all of the investment that they have made in AI and AI infrastructure is paying off. Now, that manifests itself also in the cloud business, right? Because you need the data center capacity from a storage perspective. GCP is doing well on that, but they are offering generative AI tools at the enterprise level. You're seeing a combination of both. And I think the print was pretty good, just nothing that exciting to write home about. One real quick one. I asked if they would do what AWS did last quarter, give us a revenue run rate number. And her response was, I'll give you another question because I'm going to answer that later on the call. So maybe watch out for that.
Ludlow, the co-host of Bloomberg Technology, a closer look there. Comments out of the CFO of Alphabet, Ruth Porat, the outgoing CFO. We should point out, of course, still sticking with the company. The shares oscillating between gains and losses. Let's turn our attention to another one of the Magnificent Seven that hasn't been so magnificent this year. Tesla, the shares, the only decliner among the Magnificent Seven on a year-to-date basis and declining here in after-hours trading. David Traynor joining us right now, the CEO over at New Constructs, which has a sell rating on the stock, a stock now sitting on what is now, I believe, its fourth consecutive quarter where they've missed estimates here, at least on the top line numbers here. And it's raising a lot of questions, David, about the growth story, what it is, or more importantly, what it can be, depending on what the lineup looks like. Any hope?
I don't think so, Romaine. I mean, I think this growth story was really confirmed to be broken last quarter when we didn't just see a deceleration in growth. We saw a decline in deliveries and margins contracting. I think the best days of this company are behind it, especially in the car business, as competition only gets stronger and their competitors' market share gets bigger and better. And Tesla's just not as popular as it once was. And I think the margins that we've seen in the past are not sustainable. And I think it's notable that the company is still missing estimates when we know that all the bullish analysts out there are putting out a low number to make it easy for Tesla to beat. So it's almost surprising they still beat the already reduced numbers.
There are some broader trends right now when it comes to car buying and EV buying specifically that's hurting Tesla. There are obviously some very Tesla-specific things that are also hurting Tesla. I do want to focus on one thing, particularly when it comes to valuation, David, because a lot of investors, they don't value this as a car company. They value it as a tech company. And Elon Musk has been very good about trying to shift that narrative around the broader tech capabilities. We are the original AI company, or we are more of an energy company than just, a car company. We're a battery company here. Any credence to that? I mean, they've shown in the past that they can make a pivot. Do you not see that up ahead?
I don't know how big has the pivot been, Romaine. I mean, I think maybe the only other segment besides autos is energy, and it's still maybe it's below 10%. Never's been much more than that. I think Musk is a great marketer, an amazing marketer, and it feels like every time there's bad news, he pulls another rabbit out of the hat, whether it's a robot or a spaceship or something else.
I forgot about the humanoid robots.
Yes.
Yeah, that's it.
That's a big talking point.
How could you forget? I mean, it's such a good dancer, right? And so. I think these are diversion tactics. I think it's part of his marketing prowess, and I don't see that there's anything that Musk is going to do that's going to generate cash flow adequate to justify the valuation. So whatever they're doing, right? And these are not necessarily new businesses where there's green field for them to make enormous amounts of money, whether it's the energy part of the business or whether it's batteries or whether it's robots. There are a lot of other companies that are really successful already in those areas that aren't going to make it easy for Tesla just to come in and all of a sudden make a lot of money. Robotaxi is a great example.
Yeah.
The companies, Tesla's way behind Google and Waymo in their robotaxi. So it's like, how are they going to make money when there's already other businesses out there making money in those businesses? I just think it's a diversion, unfortunately, and investors sort of holding the bag here.
Yeah.
Are going to feel a lot of pain.
By the way, those humanoid robots do have names. They're called Optimus. So let's personalize them when we can. No, I'm kidding. When it comes to the main business, which is making vehicles, Tesla does say its plans for new vehicles are on track for production in first half of 2025. What scope do you see where it kind of is under promising and can over deliver here on the core business, which is making these EVs?
I mean, I think we've seen a lot of over-promising and under-delivering in the past, whether we go back to the Cybertruck, which was promised for a long time and kept getting putting off. And then, of course, the everything after the Model S was promised for a long time. Model X, Model 3 as the low-cost alternative to the expensive Model S. And wow, I mean, I think Bloomberg actually had a special page dedicated on the terminal that tracked just how far off Musk's estimates and projections and promises about production of these other vehicles was compared to reality. So we're still waiting on the Roadster. I mean, I feel like Musk does a really good job of saying what people need to hear to believe in the stock.
Yeah.
And they have an enormous amount of patience with his track record of not delivering. That said, even if they do deliver a lower price product, it's going to be what everyone else already has. So I don't know how. I think Tesla's margins are going to be lower on these these lower price products, not higher. And so there's really there's no salvaging the fact that this is a broken story, in my opinion.
So the other thing about Tesla is that it's often a precursor, a canary in the coal mine for other EV type companies that investors look at. What's the takeaway for someone who's betting on the EV industry overall from this set of results?
I mean, for me, the big takeaway, Scarlett, is that the firms that have a more diversified portfolio of cars, where they've got EVs and hybrids and internal combustible engines, are far better positioned to continue to make money. I think in so many ways, the EV market is saturated. And that's why we're seeing a decline in demand, decline in buying. A lot of it's being picked up in the hybrids, which are actually a lot more efficient. And so I think in many ways, yeah, I mean, the first mover advantage that Tesla had for a while was great. Did they truly capitalize on it? No. Now that all the competition is here and a ton of EVs have flooded the market, on the margin, demand is going down, which is why we're seeing some of these legacy big automakers shift capital away from pure electric vehicles and back towards hybrids and internal combustible engines. They're not doing it because they're not making more money in electric vehicles. They're doing it because they can make more money in the other segments. And I think that is for sure a canary in the coal mine that only spells more trouble for Tesla.
All right, good stuff. David Traynor, CEO of New Constructs, thank you so much. And let's stay on the topic of EVs and get more insight on the broader EV market overall with Stephanie Valdez-Streety. She is Director of Industry Insights at Cox Automotive. And Stephanie, you heard what David was saying, that the EV market is saturated from where he sits. Is that what the data that you track shows?
You know, I think that we're still in the early stages, and I think there's a lot more opportunity to have more EVs in different segments at different price points. So I don't think we're oversaturated. I think what we're dealing is we have new technology, and we're in this adoption stage where we're getting more to the mainstream adoption. And so I think some of the challenges around price, which is the top barrier, and also lack of infrastructure. And if you look at Q2, we were surprised by the results. Q2 ended up being a record quarter. And for the first time, we're talking about Tesla, for the first time, Tesla's share fell below 50%. And so it just shows you about the competition that is really entering the market. And it's going to take a lot of really engaging consumers and trying to convey that value proposition and really create excitement about your specific brand or vehicle.
And I'm glad you bring that up because I feel like that gets lost. So many people focus on Elon Musk as a person and whether that's turning people off or they focus on broader consumer trends. But you kind of forget that if you wanted to buy an EV 3 or 4 years ago, you had pretty limited options, and those options were basically Tesla. And now you have several more. But I am curious about the commitment of those competitors to this EV space, particularly, Stephanie, in light of the announcements that we got out of GM, at least pausing some of its expansion, I guess, of its EV capabilities, and a couple of other companies that have also made it clear here that they've at least slowed the pace of their EV adoption.
Yeah, I think that makes sense. For any, manufacturers have always had to do this, right? When they launch a new vehicle, really trying to meet production to match demand. And so we've seen some of the OEMs react to that and slow down production. And then the other thing, too, I think with new EVs, some of the competition is coming from, as we heard earlier, hybrids, gas hybrids, plug-in hybrids, and also used EVs. And then the other thing I think which is helping or kind of impeding adoption or consideration for EVs is just the uncertainty in the economy, whether it's interest rates or the upcoming election as well.
Do you have confidence, though, particularly, we had Joe Biden, I think it was talking about this idea of getting, more than half of the cars on the road being EVs. I think it was like by 2030 or something like that, which seemed ambitious at the time. Do you think we're still on a pace to get that, even if we don't hit that actual number? Do you think we're on pace to see that type of adoption, or are we going to have something that's a little bit more balanced between EVs, ICE vehicles, and I guess hybrids in between?
Yeah, I don't think we'll reach the 50% by 2030, but I think we're definitely going to start to see more and more adoption. We actually did a path to EV adoption study recently, and when we asked consumers who were considering a vehicle within the next 2 years, but not an EV, they said within the next 3 to 5 years would be a good time to buy an EV. So I say that to say within the next 3 to 5 years, we'll start to see more individuals, more consumers switching to become more of an EV considerer, and hopefully that translates into a purchase. But I think it's all tied to, right, like having more options, more affordable options, and then reliable, accessible infrastructure is going to be key.
Do you ever see, do you anticipate that we're ever going to get Chinese-made EVs in the U.S. market in a meaningful way?
Not in the near term. I think that's one thing. If you look at just that's both, if you look from a Democrat, Republicans, both are aligned on kind of their position around Chinese. I think that's why it's so important for the U.S. to have these affordable EVs in the marketplace, or else you like what you said, there might be a doorway for the Chinese to come in and really start to sell those and create a huge market share for the EV industry.
Yeah, well said. Stephanie Valdez-Streety, Director of Industry Insights at Cox Automotive. Thank you so much for joining us today. And that gets to the larger point, which is people like their ICE vehicles because they're more affordable. They're lower priced and everything around it. The insurance cost is lower as well. There's no hassle. I mean, if you were to get insurance on an EV, right, to get it repaired is a different price point than your regular ICE vehicle.
Well, we went down this rabbit hole as a family because we very seriously wanted an EV. And we basically test drove every EV that was out there on the market. Ultimately, we got cold feet for two reasons. A, the cost was higher, the total cost was higher to buy, but also the charging infrastructure was a big deal. Of course, we live in New York City where, you know, it's a little bit different than being in a suburban area where you have more reliability, and that ultimately scared us. So I think the point about infrastructure is huge. If you get infrastructure, meaning not just Tesla infrastructure, but broader infrastructure where people have that comfort level, maybe you'll see faster adoption. And of course, prices have to come down too, because most of these cars are priced as luxury products.
Absolutely.
With the exception of a couple.
Well, the infrastructure thing is another point because Elon Musk was a big driver behind expanding that infrastructure, and it feels like he's changed his mind. So if you're going to rely on him to build out the infrastructure and he's going to switch to the Optimus, humanoid robot, then is that really going to get done?
Can you ride this robot?
The Optimus robot is supposed to help Tesla build out its own stuff first before they look to sell it to other companies.
Oh, okay.
So,
all right, I'll be waiting for that day to come as well. But just on this point, though, too, about the transition to renewable energy, I thought the kind of the resurgence that you're seeing in hybrid vehicles, and if you remember how there was a lot of criticism of Toyota and Honda that they didn't come out with an EV right away, and they were kind of like, well, you know, we're not so sure. And it looked like they were probably a little bit more prescient than those folks.
They were like, you know what, people don't necessarily want to go from ICE to EV. Let's just give them a transition point through those hybrids. All right, let's take a look at how markets closed on the day.
Truck, right?
Of course. Okay. I mean, you know, I'm rumbling around in the suburbs of New York doing, you know, Instagram following me. Yeah, all the time.
Cyber trucking.
Absolutely. Let's take a look at how things closed on the day. The Magnificent Seven, mixed day overall, and kind of a mixed day right now in the after-hours trade. S&P 500 giving up early gains, closing down about 0.2%. But the big story continues to be that rotation into small caps. It's going on.
Yeah, it's be interesting too to see like whether that is really being driven by the macro. Of course, we have a big Fed meeting next week where maybe we'll get a little bit more clarity as to whether these rate cuts and this drop in interest rates everyone thinks we're going to get this year will actually happen. Because that does seem to be a big impetus for this trade.
Yeah, there's a lot built into that, priced into it. We'll see if it all plays out.
Absolutely.
This is The Close on Bloomberg. While Elon Musk watchers digest this afternoon's Tesla results, they're also gearing up for a change in location for some of his companies. This comes as Musk announced plans to move X and SpaceX to Texas from California after he had already relocated Tesla's headquarters to Austin. It's part of a larger plan to further align with his right-leaning political affiliations. Joining us for more now is our Texas Bureau Chief, Julie Fine. Julie, is this a political move or is this based on financial considerations?
Well, I think you could guess it would be a little bit of both. I mean, Elon Musk saying on X that he made this decision after a new law in California that bans teachers from notifying parents if there is a change in a student's gender identity or sexual orientation. He said, you know, this was time that he's moving this to Texas. On the flip side, you know, for many, they've decided it is just simply easier to do business here, fewer regulations, no state income tax. So there could be a lot of reasons that he decided to do it, but he certainly made it very public that this was the reason he decided to make the move for SpaceX and X at this time. I mean, you do have to point out here, too, that Elon Musk right now is the largest private employer in Austin. I mean, this is somewhere he clearly likes doing business. He's been seen with the governor here. Now, he has pledged to give former President Trump $45 million a month. So therefore, obviously, he's getting very involved in politics at the same time.
And it's not just, of course, Tesla and Elon Musk. We've seen several other companies, if not move their headquarters there, certainly set up relatively large operations there for probably some of the same reasons, at least the perception here that it's a little bit more of a business-friendly state, and obviously maybe the politics are a little bit more liking to the executives there. Is there momentum behind that, or have you just kind of seen this batch of billionaires make their move and we're all kind of done with it?
I mean, I think you've just seen billionaires make their move and businesses make their move for some time. Some may point out it's because of the politics, but others may point out it's simply just because the cost of living. So I think in this case, obviously, Elon Musk pointed out the politics, but you've got a lot of other companies that are coming here. I mean, Goldman Sachs moving quite a bit of employees to Dallas, and they're not sitting there discussing the politics of the situation. They're talking about the lifestyle of the situation and the cost of living.
I got to ask, as Elon Musk has remade himself into one of President Trump's biggest boosters, what do we know about how much he's pushing the former president on EVs and his EV policy, and how he's going to move forward with his plans to dismantle President Biden's goal of turning, 50% of all vehicle purchases into EVs by 2030?
You know, there has not been a specific discussion of what they have discussed, but you've heard both of them speak publicly about that subject. I wouldn't be surprised if you see that continue throughout the campaign. It'll be very interesting to see if you see Elon Musk with the former president on the campaign trail. Obviously, you saw him endorse him on X after that attempted assassination. So it'll be interesting to see just how involved he gets and how much he puts himself physically out there with the former president.
All right, Julie Fine, of course, leads our coverage down there in the great state of Texas. A closer look at Elon Musk and some of the politics around some of these companies relocating to that state here. Coming up here, we're going to set you up for what to watch over the next 24 hours. This is The Close on Bloomberg. As we round out our coverage here on this afternoon, let's push ahead to what could potentially move the markets over the next 24 hours. And we start off with earnings. In the pre-market, we get quite a few interesting ones, including AT&T.
Yeah, I really wonder what that data leak is going to mean for AT&T. I mean, it didn't actually disclose people's Social Security numbers or their credit card information, but it's certainly a breach of confidentiality with customer base overall. You get International Paper and Otis in the morning, and after the bell, you're going to get some big names: Ford, IBM, ServiceNow, and Chipotle among some of the ones reporting after the close tomorrow. Yeah, I'm looking forward to Chipotle because there's been so much controversy over whether they're giving people smaller burritos, not really filling up. We've seen the evidence, Scarlett. Have you seen the TikTok videos? I love the sleuthing going on this. And by the way, I've now decided I'm never going to order online. I'm just going to do it through the. Yeah, you got to, right? Because they're saying if you order on through the app, then you're going to get a smaller portion. Right, but you got to watch them while they make your burrito. Who knows if that's true? IPOs apparently are back. Scarlett, OneStream software company scheduled to price later tonight. We're still waiting on official word of that pricing, but if it does price, then it will start trading tomorrow. And we get some economic data in the morning as well. Yeah, S&P Global PMIs, and we get new home sales at 10 a.m. A lot of people are starting. There's movement in the housing market. For Absolutely sure. Here, and a lot going on in the world of politics, not just around Kamala Harris. The current president, Joe Biden, set to address the nation at 8 p.m. Eastern time. This will be the first time we've heard from him since that stunning announcement over the weekend that he was dropping out. He's come out of COVID isolation. So. Absolutely. All right, we'll have full coverage of all of that right here on Bloomberg. Stick around. Balance of Power is coming up next, right here on Bloomberg.